Hi there, I'm Myke Clark. I'm the CEO of Solar Alliance with a halftime report. Thanks a lot for joining us today. I'm going to walk through a little bit of what we did over the first half of 2022 with some bit of an outlook as well for the second half of the year. You know, it was a very good first half for Solar Alliance in terms of operationally what we've managed to accomplish. And we are on track for a record year in the commercial solar space for Solar Alliance. We have a project backlog, so that's contracted projects, signed deals that exceeds now $5 million. And of course, last year we did revenue of about $3.7 million. So that gives you a pretty good indication of what we've seen so far this year in terms of growth, in terms of contracts and signed deals. So that exceeds $5 million. So that's a good indication there that things are moving forward quite well. Now, that's on the operational side of the business. I want to touch a bit on the capital markets right now as well. There clearly has been some weakness in the capital markets, and that has impacted Solar Alliance as well. Fundamentally, though, there is nothing different about this company. In fact, we've improved our processes, we've improved our revenue, we've improved our sales funnel. So things look good from an operational perspective, but clearly our share price is being impacted. Now, we keep in mind that we want to make sure that we're doing everything we can to get our story out there, to tell our story to as many investors as possible. But really our key focus still does remain on executing the business plan and staying on track for that record year that we see in the commercial space moving forward. We want to keep our eye on the prize, which is really building out market share, selling, building, and eventually owning and operating solar projects in the southeast of the US and elsewhere across the US. So to that end, in the first half of the year, we signed several large contracts in the first half of 2022. And as noted, our backlog now exceeds $5 million. In addition to that, we actually commenced construction on the two projects that we own. Those are both based in New York State, upstate New York, and those have long-term power purchase agreements. So they'll generate long-term recurring revenue once that construction is completed, likely in September or October of this year. So those are under construction right now. Those are assets that we own and that will generate long-term recurring revenue for us. And if you recall our business model, it is to combine the EPC or engineer, procure, construct, so that's building for third parties, combine that with assets that we own ourselves, which will generate that long-term recurring revenue. So we think it's a good business model, steady cash flow from the EPC side of the business, which we're seeing now, and it continues to grow in combination with assets that we own that will generate that long-term recurring revenue. So a couple of the real highlights that we saw beginning of the year, the first half of the year, a 0.5 megawatt project for a customer in Kentucky, a megawatt project with the Knoxville Utilities Board. So again, these are the types of projects that we've been talking about for a while, and we've now really transitioned the company towards executing on. We have another project in Tennessee, a 526 kilowatt project with a company called AES Seal. So that's a company that has, operations in a variety of different states. And then we're also targeting a few other projects in that sort of 500 kilowatt range, all the way up to several megawatts. So that's what our sales funnel looks like right now as we start to convert those into actual signed contracts and then build them out over the course of the year. So really strong sales pipeline that we've got in place now, and also a strong portfolio of projects that have been signed. Should also note that we listed on the OTCQB, so it provides a little bit more liquidity in the US marketplace for investors as well. So what does it look like for the rest of 2022? We're going to continue that growth in terms of building for third-party customers. We're going to see an increase in that backlog, I would hope, or definitely an increase in the revenue quarter over quarter and year over year, which we've seen. We're also going to continue to build out that pipeline of projects that we own and will eventually operate. So like the projects in New York State, those two projects that we own, we want to own more projects. We want to have a growing and large portfolio of assets that just generate cash flow for us. And that's really what owning solar projects is all about. They're relatively low maintenance and they return a good return to the investor. And so that's something we want to build out over time, is that portfolio of assets that generate long-term recurring revenue. So there's also a couple of other items that we want to touch on. Large system sales. we continue to build projects in the sort of 500,000 to 750,000 US range, all the way up to $1 million to 2 million. We want to expand that even further. So we're targeting projects in the 5 megawatt range now. None of those have come across the line. So you'll see a press release, obviously, when that happens. But that's the kind of target that we're looking at now. So gone are the days where we are simply selling $50,000, $100,000 projects. We've kind of made a step change now where we're targeting those $3, $4, $5 million projects, which for investors obviously is hugely beneficial. That'll impact our top and our bottom line if and when those projects come across the line. Finally, we are looking at some expansion opportunities too into Canada. And a lot of Canadian investors ask us when we're going to be doing something in Canada. We're looking at some opportunities in Ontario with a couple of different partners. And again, if and when we get those across the line, we'll announce it. But we think there's a real strong opportunity for expansion into Canada. So to wrap it all up, first half, very good from an operational perspective. We continue to grow. We continue to build out projects that we own and will operate. Clearly, the share price has not kept track with that progress. But we think, with potentially a turnaround in the markets, we'll see a bit more of an uplift in our share price. And beyond that, we're doing what we need to do from an operational perspective to illustrate the value to shareholders, so that'll be recognized. And ultimately, it is an opportunity for significant growth for the company, but also for shareholders. And that's really what we're driving towards. So I want to thank you for taking the time today. That's the first half report for Solar Alliance, and we'll make sure we keep you connected as we move forward.